What's going on, everybody? It's Jeff here. Welcome back to the channel. In this video, we are going to be talking about everything that you need to know that is going on with AMC stock right now. We are going to cover what the 100% utilization rate means for the stock going forward. We're also going to be covering the updated short interest and the days to cover, which I believe that number is actually less than what the real days to cover should be. And lastly, we are going to be going over what is expected to happen tomorrow and in the future now that the fully paid lending program, the compliance expiration, ends as of tomorrow, guys. So stick around. You're not going to want to miss this. For those of you that are new to the channel, all I ask is that you hit that like button and subscribe and join the family. And if you're interested in joining our private community, first link in the description. We have over 400 members. I have my private portfolio over there. I go over all my stocks and option picks, and we also just come together to talk stocks and strategies all day long, guys. So if you're interested, come check it out. We'd love to have you. Let's get into the video. First off, just want to point out where we are currently at. Right now for the day, we are up about 2.69%. Right now, we are still seeing a little bit of consolidation happening on the 1 day, 1 minute chart. Just to point out where we closed off on Friday, we are in the green even after yesterday's hard pullback. First thing I want to talk about is the borrow free rate. It did drop a little bit. As of yesterday, it was going down. It hit a high of 21.2%, came back a little bit to 18.8, came up to 19.5, and as I literally just refreshed the screen, it went down a little bit to 18.3%. The available shares to short is still 15,000. That is good news, as GameStop would hit that point in January, at the January 24th, 25th, and 26th time frame. We know that anything above 20% is really good. So we are hanging on strong, which is always a good sign, okay? Let's get into this. This is the Ortex. This is just a screenshot that is taken. Couple things I want to cover. First thing I want to talk about is the days to cover. As that number increases, their capability of covering is just elongated. Anything over 1 day is very long time to cover, okay? 1 day, 1.2 days is a longer time to cover comparative to other stocks when you examine that days to cover number. Here's the reason why I believe that number should actually be higher than it really is. So they get that number by going off of the 65-day average volume, okay, which is 166 million. But as this chart shows, and as I've said to you numerous times, that the volume has severely decreased. This is going back 1 month towards March 20th. And as you can see, the highest volume was 129 million. Scroll down here a little bit further. The 3 month, which is almost that 65 time frame when it comes to 65 trading days, is about 160 million. The 1 month is only 55 million. So that time frame, I believe, should actually be much longer than 0.88 days to cover, which is a indicator that I heavily look at. And after studying other stocks that have squeeze before, have short squeeze, that number is very, very important. So that is a good sign for us. Next thing we are going to talk about is this 100% utilization. First thing I want to just give you a different perspective of what exactly utilization means. Utilization is defined as loaned shares divided by available shares in the securities lending market, expressed as a percentage. So in general, the utilization rate is the number of shares borrowed divided by the number of shares that institutional investors actually lend. Right? That higher rate indicates that there's more of a supply of shares and the lending market has actually borrowed. So inevitably, that is a good sign, but it just increases the likelihood that the lenders are going to call the shares back from the short sellers. Okay. And the reason being is because when you short a stock, you are selling to open and then you are buying to close. So if the lender says to the short seller, give me that, that's when the buying power comes in. Okay. So just because it's at 100% does not mean that there's an end to this. It does not mean that it cannot go higher. Okay. Or I'm sorry, this does not mean that the price has to go higher because we have hit that 100% range. However, that is a good indication. Indications are always good. Next thing we are going to talk about, and I heavily weigh into this, currently in Q2, there's not been an insane amount of institutional ownership buying that has been at least reported to market beat. But what's more important, $0 sold. And same thing, look at this 68-to-1 ratio in Q4. Very, very important. Next thing I want to talk about is the CNN. This is from CNN. I end up pulling this up. Just talking about quarterly institutional transactions just to see what is going on currently with AMC. And as you can see, a lot of green, a lot of buying. You go down this even closer look at it. The top 10 owners of AMC Entertainment Holdings. Look at these these mutual funds. Insane increases. So this is a good sign. Now, I know I have gotten some messages from people talking about saying that, you know, AMC is dead, that we're stupid for holding, all right, and sell your shares, and that I'm just an individual that pumps the stock. And I do have a good sized stake in this. I've made it public to you guys many times. I currently hold 5,000 shares. However, I am not all in on this stock. I would not want to be all in on any one stock. I have a family that I have to take care of, and I want to make sure that if God forbid anything ever happens to me, my portfolio is at least stable until somebody else can get in there and be able to, you know, freeze my assets to be able to support my family. These are things I think about now that I have a child. So I'm not all in when it comes to 100% of my portfolio. I'm all in with those 5,000 shares. I might add to that position, but I'm all in means I'm continuing to hold and I'm not selling. Also, by looking at the charts, we are down at support. And I've said this numerous times. When you look at this on a 30-day time frame, this is a stand. We are right at support. Look at this numerous times, that 905, 950 mark. That's support. Why would I sell? This is a reopening play. Theaters are opening up. I'm here in Connecticut. I just got news on May 19th. All restrictions from businesses are lifted. That means restaurants can go open. I think you still have to wear a mask inside, but there's no, you know, you have to order food at the bar. There's no 6 feet apart. There's no 50%, you know, occupancy. It's wide open. So the curve has just started. People are going to feel much more comfortable. I believe in Connecticut, it's 35% of individuals have already been fully vaccinated. As far as the United States, I think that number is still in the 20s, or the 25, 26% time frame, but we're only going on the up and up. So there's many reasons besides of what is going on with the short sellers and the hedge funds of why I'm not selling this stock. Let me just, you know, preface to the individuals that have reached out to me and commented saying, you know, you're just a pumper and to sell the stock. Next thing we're going to talk about, the last thing we're going to talk about, and I want to clarify this a little bit. This is, I'm sorry guys, I'm starting to lose my voice. This is the fully paid lending ruling that originally the commission had given these broker dealers 6 months from the issuance of the letter, which happened back in October, which is up until April 22nd. I want to just say this, guys. What the ruling is for is it's who lend the broker dealers fully paid or excess margin securities to provide the securities lenders with collateral that fully secures the loans. So to answer your question, or to answer the question that I hear most often is, hedge funds are not broker dealers. Broker dealers are, you know, TD Ameritrade, Fidelity, Charles Schwab. The hedge funds are not broker dealers. A broker dealer, what they do is they make the transaction between the buying and the selling of a security. Okay. And hedge funds can act as a dealer by making that decision on behalf of the capital that they're controlling, but they are not the broker dealers. However, this ruling will basically say to the broker dealers, which are the individuals that can lend to the hedge funds, saying, listen, we need to raise those requirements. So that's why that this is a good sign for us. Inevitably, many things are lining up for us as holders, things that we've wanted from what comes to ruling, metrics, numbers. Many things are lining up, but nothing is guaranteed. And just because these things are lining up doesn't mean that there's a time frame on this. So keep that in mind. I hope you guys enjoyed this video. I'll see you in the next one.